Okay, folks, welcome to day one of the new Trump administration. And we are focusing tonight on two areas. Initially, actually, three. Let's go with three. One, crude oil, light sweet crude. The regular stock market and bond market may have been closed today. The futures markets were not. And they told us a lot about what they heard out of the Trump administration before the inauguration. As you could see here, oil rolled over and took it on the chin. And we're going to talk about a couple of conflicting articles that are out right now. That one is kind of bearish, the other one is kind of bullish. So we'll keep an eye on this pretty closely tonight as the night rolls on. You can see I already have a couple of alerts set up here. I want to see if we get a continuation move lower. Okay, yields are moving lower. Oil, this is really reflective of the trade earlier in the day, not so much the post 6 p.m. trade today. Crude oil just broke a support level, not a major one. Let's set up another alert here. I am short of energy stocks in anticipation of a sell the news event. So I'm looking for ideally a break in oil prices because they're highly correlated to the XLE, which we are short of. Now, we were called out of our common stock of natural gas on Saturday. So we have a reduced position there. I still have a short spread on puts, which puts us long of natural gas. Yields down 0.43. We'll go to a chart of natural gas in a moment. Let's just stick with the charts in front of us. First off, NASDAQ up. Let's set up some alerts here. I had expected a bit more action at the open. Okay. Volatility is down. Let's pause here. Let's let the market settle out. Let's say hello to folks. George, welcome. Tim, welcome. Hey, guys. Let's go over to the big chart. That's a weekly view. Let's drill down further. Not much action here. I had expected more, to be honest with you. Let's take a look at the US dollar, which was very active today to the downside. The dollar is flat, down on the day, but flat at the open here. Let's see who's benefiting from the down move in currencies. The British pound today surged. Canadian dollar surged. Euro surged. Japanese yen surged. So a broad-based rally in competing currencies. US dollar, the loser. The question is why? The reason is that you had an announcement out of the Trump administration that Don't expect much in terms of tariffs immediately. We've been saying this. There was a lot of talk about tariffs. They're going to hammer the globe with tariffs. I said, what they're trying to do is they're trying to bring these countries to the negotiating table. Case in point, TikTok got banned the other day. What did the new Trump administration do? They came to the rescue. Why? They're talking to China. The other day, Trump and Xi of China picked up the phone. They had a conversation. What did that mean? Agriculture names moved up. So that is what is causing the dollar to take a break here, because dollar bullish policies are being put on a pause button. Expect more news. There's going to be a lot of news flow coming out in the coming days. And I think that the market is going to be very, very sensitive to that data. I keep checking the news here for new information, because I'm sure right now that the Trump administration is doing nothing but signing executive orders, and we'll find out what those are tomorrow. So right now, the weakness in the US dollar, the weakness in oil, the weakness in potentially agriculture. Let's bring up corn. I have a short position on here. That's down 1 1/3%. So you could see that what we were looking for is kind of happening, and that is a sell the news event. They rallied oil, they rallied gold, they rallied the dollar, they rallied agriculture, commodities into the inauguration. And what you're getting is a bit of a rug pull here, because we kind of knew that there was no way overnight they were going to slap tariffs on the globe. It wasn't going to happen. That's a tax on the consumer. It's really not a tax on other governments, unless, of course, they're going to absorb those tariffs and accept less of a profit margin, which is, of course, entirely possible. But you can't expect everyone to do that, especially the Europeans. The Chinese, maybe, not Europe. Bitcoin, this surged to do all-time record highs today and backed off. So again, probably no other sector stands to benefit more from a Trump administration than crypto. What's it doing right now? Bitcoin's down 1.61%. Now, just checking back in as we settle out here. I don't know why this is on a 5-minute. I did not do that. Let's go to a 30-minute view on yields. NASDAQ 15-minute view firming up. We may get a move higher here. Let's go back and check in with crude oil. Again, folks, we're down 1.36% on the day, but a lot of that came earlier today. Right now, we're flat after the 6 p.m. open. Let's check in with other areas of the market. We did gold. Let's stick with the commodity trade here for a moment. Silver's up. Silver's looking really good here. Still trading down on a 4-hour time frame below its 21-period EMA in orange. Let's up an alert here. I'm going to be setting up a lot of alerts tonight. I want to keep a real close pulse check on what the markets are doing this evening. Let's see what copper's doing. Copper's down. Looks like the entire commodity complex, with the exception of silver, is down a bit here. RBOB gasoline, that had been rising. We're pulling back somewhat this evening. Let's go with natural gas. We still technically have a long position here, and we're pulling back 3.44%, but net, I still like the natural gas trade. I don't plan on adding more to this trade over the course of the next several days until such time as we get a vibe for how the markets settle out here. How are they going to react to the plethora? The plethora. There's going to be dozens of executive orders coming out over the course of the next couple of days, and we're going to need to digest them. Let's check out the Russell 2000. The Russell is loving day one of Trump 2.0. That's because yields are down. Mid caps also loving the new Trump administration, moving up higher, up over 1%. Let's go back to CL for a moment here. Again, I have short positions on energy, highly correlated to oil, as well as we have a short position on corn. And if anything, we appear to be weakening up here a bit. Corn is now positive on the session. Why don't we just down? Is it even open? I could have sworn we were down before. No, this is not open yet. I must have typed in the wrong symbol. Yeah. Oh, I put in soybeans. That's what I did. Okay. What else? What else do we want to take a look at? YM. These are your Dow Jones names. Up half percentage point. Looking pretty good here at the open. Nice little 15-minute bullish reversal bar. Initially down, now up. Good stuff. Let's check back in with the NQ. NQ now up 0.55%. Bullish key reversal bar. 15-minute view with about a minute and a half to go in this 15-minute bar. Do we break out above resistance? Let's check back in with the US dollar. Dollar's not doing much at current. What did I miss? What did I miss? Live cattle. Live cattle up. Palladium moving lower. Looks up to me. I don't know why it's showing as lower. 959. That looks up to me. Wheat doing nothing. Okay. All right. I think we covered it. Hey, Mr. Sean, welcome. Happy day one of Trump 2.0. Okay, let's get to it. The futures are up. The equity futures anyway. The US dollar is down, yields are down. That bodes well for the equity market to continue to move up higher, and that would be a broad-based move, which is good. Now, going into the election, I have been warning about booby traps, and I labeled this live stream, Trump destroyed a Goldilocks economy. Now, yes, that's partially clickbait to get people curious. Now, what the heck is this guy talking about? They don't know me. They see that. Oh, what's he talking about? Right? It's a setup. Everything that's going to happen over the course of the next year is already planned out. The villains that worked under the Obama and then again at the Biden administration, they may be out of power, but the damage that they've done, we just don't know about yet. I don't know, and I've been saying this over and over again, I don't know whether or not Trump is going to pound the heck out of the Bureau of Labor and Statistics to get their revised numbers out. Get them out. Because if there are going to be job revisions, we don't want them a month from now. We want them right now, right very now. So that way we could say they did it. It's on them. So I hope we get that very, very soon. Because if you didn't believe that there were crooks in the White House and in this administration, if you thought that everything I've been saying for all these years is nothing but conspiracy theory, okay. Biden preemptively pardons Fauci, Schiff, Cheney, Milley, and family members. You don't do that to innocent people, especially innocent people that haven't been charged with a crime yet. I don't even know if this is legal. Hopefully it goes to court. Hopefully it gets challenged. How do you get pardoned if you weren't convicted of a crime yet? So this tells me all I need to know. It's the vindication. In a way, I'm happy it's out. It's a vindication early on that those who are in the same camp as me were absolutely right. The other problem is that now that I'm over the pat on the back, you knew it anyway, that these people were corrupt. Now I got to worry about, okay, if they were willing to do publicly what they did to President Trump, what did they do secretly that we don't know about yet? That's the big question. So this is why I was so interested in taking a look at the price of oil this evening as it opened up. Today, early on, it pulled back. Why? The threat of tariffs was reduced. And bear with me one second. And later on in the day, I saw this. So initially I was like, okay, it's a sell the news event on oil. Now we get Trump vows to refill SPR, that's the Strategic Petroleum Reserve. Remember, early on in Biden's term, he was cutting off leases for new drilling, offshore leases as well. Even though the Supreme Court said you can't do this, he did it anyway. And the price of oil kept going up higher. What did he do? How did he combat the rising price of oil? He emptied a good portion of the Strategic Petroleum Reserve. And he allowed for Russian imports. Still, after the Ukrainian invasion, Russia was still selling us oil up until a couple of days ago. Biden's parting gift of accelerated sanctions against Russia, this just happened a couple of days ago, and tankers appears to have promptly removed as much as 1.5 million barrels in daily supply and pushed oil prices up to a 5-month high. Why? Why now? It's because he's trying to undermine the Trump administration every chance they get. It's going to take time to unravel the deceit, the landmines that they've laid for President Trump. But while Russian supply is set to shrink materially over the next few months, what does that mean? Oil goes up in price. U.S. demand is about to surge. I don't know why they're saying that, unless the demand for U.S. oil is about to surge. That's because President Trump said after no good. Oh, okay. He's saying because of the SPR. All right. So here's what I don't agree with. I don't believe that he's going to allow the sanctions on Russia to continue. So I think that net, this is going to be a big goose egg, to be honest with you, because all he's got to do is undo the sanctions placed on Russia, especially if Russia comes to the negotiation table and all of a sudden that Russian oil starts flowing again. So net, I don't think that this is going to amount to a hill of beans. And I think the market is agreeing with us here at the open because oil is down 1.38%. Now, can it move up higher? Of course it can. But at this point in time, it's under a little bit of pressure. We'll see what tomorrow brings. Secondly, did you know that tomorrow, by happenstance, just by happenstance, the debt limit, which was just negotiated a couple of weeks ago, we've already hit the limit. Effective tomorrow, you're going to have President Trump having to deal with Congress on a new debt ceiling limit. So already, again, we already knew about this one a couple of days ago, but another obstacle to try to hamstring the administration from doing what they need to do, and that's unwind the damage of not just this administration, frankly, multiple administrations. Economic data coming out this week. Oh, wow. See, it's already beginning here. This is new. Vivek Ramaswamy is ditching Trump's Doge Commission led by Elon Musk. I think he got overshadowed by Elon, and I don't think he liked it. I think it came down to an ego thing. Interesting. Interesting. Sad to see. All right. Okay. Economic data coming out this week. Obviously, today the markets were closed due to Martin Luther King holiday. And tomorrow, nothing scheduled. On Wednesday, we get U.S. economic leading indicators. Then on Thursday, initial jobless claims. Friday, existing home sales, consumer sentiment, flash services and manufacturing PMI on Friday. Net, not a lot of data coming out this week. What's really going to matter this week are earnings. And beginning tomorrow after the bell, immediately after bell, like literally at 4 o'clock, Netflix announces their earnings. And we also get Charles Schwab. And I got to be honest with you, Thinkorswim, I'm getting really tired of it. They're horrible in terms of rolling out trades, options trades on futures anyway. Very disappointed. I was on the phone with them today, giving them a piece of my mind. Not that they care. But anyway, they should, because I'm speaking about how poor their product is. I much preferred their Street Smart Edge product, which they got rid of. And frankly, if it was for sale, I would buy it. And if you're interested, I'll send up a crowdfunding thing on GoFundMe and we'll buy it out. See if it's for sale. 3M announces tomorrow. United Airlines. That's pretty much it. Later on this week, we get P&G, J&J, Abbott. So we're going to have some pharma names coming out. GE comes out, General Dynamics. Then on Thursday, a couple of railroads, or at least one railroad, two railroads. Texas Instruments, semiconductor play, Intuitive Surgical, they come out. Then on Friday, we get Amex, Verizon, great dividends on Verizon. And then next week, that's when things go nuclear, or the potential to go nuclear, because we have a ton of the triple Q names reporting the week of Monday, January the 27th. I'm not seeing many comments come in. I'm wondering, is this working properly? It is. Oh no, Pete didn't come through. These guys keep wanting me to renew my subscription. Pete, sorry, I didn't see your comment. I had to go to YouTube proper. The software that I'm using is not wonderful of late. And if I missed somebody else's comment, I apologize. Okay, moving on. CME Fed Watch Tool. What are we going to talk about for interest rates this coming week? Nothing. There will be no interest rate cuts. There will be no interest rate hikes, or there will be war between the White House and the Fed chair. March, no rate hikes at current. May, they were pricing in rate cuts. The last time we had a live stream, that was last Thursday, no longer. It is now back to June, the earliest that we get a rate cut. It's not going to be a big one either. So now we want to take a look at the positioning of the market in terms of valuation. I want to take a look at it from a couple of different angles. One, we are just shy of the highs of October of 2021 in terms of the Schiller PE multiple. Actually, we're above it. Actually, no, are we? Let's move over 1 month. I don't think we are. I think we're just shy of it. Yeah, we're just shy of it. 38.58 was the prior high. At current, we're at 38.11. Very, very expensive. You have to hope that earnings come out gangbusters, and you have to hope that these companies grow into their very lofty multiples on the S&P 500. Price to book, S&P 500 price to book. We are more expensive now than we were back at the peak of 2000. More to come on this metric in a moment. The Buffett indicator will remain strongly overvalued relative to the 2 standard deviation Bollinger Band. We are above 2020 levels. Very, very expensive. Now, this is one that I don't always talk about because it's a bit complicated. This is the NASDAQ 100 relative to the M2 money supply ratio has hit 0.98, matching the 2000.com bubble. Folks, many of you were not trading back then. I was. I'm telling you, that was a frothy goddamn market. And we're now at or above that multiple as measured by M2 money supply. And you may be saying, what drives M2 money supply? Monetary policy of central banks, deficit spending, increased lending activities. I showed you about 2 weeks ago that the liquidity out of the banks was not tight. That's one reason why I was saying don't short stocks aggressively right now. Once you see lending standards tighten up, then you get worried. Right now, the banks are still lending pretty freely, but at higher yields. So these are the things that are driving valuations up higher on the stock market. Money is still fairly cheap and it's being funneled into equities. It is inflation. It is just another example of inflation. So on a forward-looking basis, at current, I believe I have that here, the forward-looking multiple. I believe I retweeted it earlier today. Yeah, here it is. So here is the forward-looking 12-month PE on the S&P 500. It's at 21.6. It's above the 5-year average of 19.7 and above the 10-year average of 18.2. So however you look at this market, it's very, very frothy, and we are in a new environment and I can't drive this home enough, where we have binary events, whether they be geopolitical or domestic landmines planted by this last administration to derail the current administration. It should make you nervous. It should really make you nervous about the binary events that are out there, not to mention, does the stock market, does the S&P 500 grow into these lofty multiples as earnings are reported beginning really this week, or actually began last week with the banks, but in earnest, tech stocks have been driving the market. Do these tech stocks drive multiples up higher? Okay, so kind of what I was saying earlier, don't expect much 2 days. I'm going to skip all this stuff. If not this. This is important. This is more. This has nothing to do with money. To a certain extent, it does. This costs a lot of money to ignore. Crime, welfare. There's a lot of expense that goes along with it, but it's not at the top of the list in terms of equities and the economy. What really influences the economy is this. And this is why I have been so bullish on LNG, liquefied natural gas. What you're going to see a lot of that could goose the markets up a lot higher in anticipation of brighter days ahead is the regulations that have been applied to the private sector over the course of the past, forget about Biden years, over the past 10, 15 years, they get pulled back. And you see news events like this that could fuel, again, brighter days ahead for the equity market. I just pulled this up earlier, and we are bullish on liquefied natural gas. And here I pulled this out. I thought it was pretty interesting and very germane to what we're talking about this evening. That is energy. The thing is that it only makes sense to pull back on energy right now, because if you're going to allow for more drilling, well, then you should expect lower prices. And that's not going to necessarily bode well for all the energy names, because they need a range of oil to trade in for them to be profitable, or else they don't drill. So anyway, this is more has to do with liquefied natural gas. Dusk for Norway as is dawn for Russia. Alarm as gas fields supplying the UK begin to run out. That's great for us. That's great for our liquefied natural gas industry. So they're not going to want to be burdened by Russia and their cutoff of supply in the future. They'll be buying from us. We're going to take advantage of it, as we have done since 2022. Prior to 2022, we had very little in terms of market over in Europe for liquefied natural gas. Now we're about 30% of the liquefied natural gas that goes into Europe. It's huge. Who won the Ukrainian war? We did. The United States won that war. The defense contractors and energy, liquefied natural gas. Also, about tariffs, don't expect during 1 to 2 days. I think that this is going to be even longer. I think this is going to be protracted. If you have yields here's the 10-year yield pressing to new daily lower lows since we reopened at 6 p.m. If you have the Chinese who are desperate, they are in a deflationary environment over there. They are desperate not to have tariffs placed upon them, at least not as many as what's been threatened. So what they will do, and I said this during one of our last live streams, is that they know that if they want to keep their markets humming and they want to avoid tariffs, one way to do it is to buy our bonds. Because the problem that we have here in the United States is that the minute that Jay Powell and company cut interest rates a few months ago by 100 basis points, what happened to long-term yields? They went up. They went up. So they know that for them to do well, for us to buy more of their junk, they need to get yields lower here. That ingratiates the Chinese with President Trump. Less tariffs, we buy their junk, and the cycle begins. And that's the way it was a few years ago. Actually, more than that, about 8 years ago. What else do we have here? We talk about China. Universal, this is universal tariffs. We have long had 40% odds of global all import tariffs. Think that's still roughly still, but arguably see the skew around this as higher odds of some form of global tariffs. It's ambiguous. And it's reported by the WAPO, so I really don't pay attention to it. I think this, by far, China is going to be the dominant story in the coming days. How many tariffs do we apply, or how much tariffs do we apply to Chinese goods? If it's not, I'll bet you that if yields are declining, it's the Chinese buying, and that you're going to see less tariffs placed upon ultimately. Let's take a pause here, take a sip of water. Let's say hello to folks. I was trading in 2000, and I lost a lot of money when they drained the market. I remember it well, pal. I remember it well, very well. So one of the reasons why you're going to see a rallying market here in the next few days is this chart here. And this is the CRB commodity index weekly view. And we are approaching the highs of 2022. And that's when you had the invasion of the Ukraine by Russia. So I think that we may get a bit of a reprieve here. One, based upon the technicals, we're a bit overbought. But I think more so, the pullback in the price of commodities due to the tariffs, that'll help. The problem for this longer term is that if the dollar, in fact, peaks out here, that is going to fuel the CRB commodity index up higher, because remember, most commodities are priced in dollars. So if the dollar goes down, commodities that are not produced here and we have to import go up in value. So the import price for those commodities hits the consumer. So if we pump oil here, it's not going to hurt us as much. Natural gas, it's not going to hurt us as much because we produce so much of it here. What'll get impacted are those commodities that we have to import. Case in point, rare earth minerals, things like that. So threat to the market. Also a threat to the market is the Federal Reserve continues to roll off debt off of their balance sheet. And this is only going to last so much longer before the war of words begins between the White House and the Federal Reserve. Because there are a couple of things happening here. Did you know that the Federal Reserve has not made a profit in over 2 years. Normally, it's a quasi-private entity, so whatever excess profits they make goes to the Treasury. They haven't had a Treasury remittance in a couple of years now. Trump is inheriting a Federal Reserve with not only unprecedented losses of $218 billion. Think about it. The Federal Reserve lost $218 billion, but it's still losing money. The Fed won't send the Treasury a dime for the entirety of Trump's term. That's never happened since the inception of the Fed. Another challenge for Trump. Remember what we started off with here tonight, besides the futures. Preemptive pardons for all these criminals. I was supposed to be a conspiracy theorist. Now, that conspiracy theorist was proven accurate. They cut imports by Russia and began already filling up the strategic petroleum reserves to drive up the price of oil. So far, it hasn't worked. I don't think it's going to work. And effective tomorrow, we hit the debt ceiling, which they just raised a couple of weeks ago. Literally a couple of weeks ago. They've already spent that money. Yield curve. Talon, welcome. Michael, hello. Okay, I added on here to the yield curve chart, West Texas Intermediate Crude. I'm going to keep this on here. I'm going to save this because it's important, because we will be watching it. Every time each one of these blue lines marks a recession. Every time we go into a recession, we see a surge in oil prices. Not so much back here because that was COVID and oil literally went to zero. The front month contract went to zero. But back here, oil skyrocketed. Here, skyrocketed. And after that COVID mess, it skyrocketed as well. And that's when Biden came in and began dumping the strategic petroleum reserves. And this red zone here is where historically the stock market breaks. And we're there. It could be any day. It could be 2 weeks from now. It could be a month from now. I don't know. I'm not that smart. But everything is set. Oil breaking out. TLT possibly bottoming out. And money flows into bonds and out of equity. So this may be a lagging indicator. Natural gas tends to surge prior to a recession. Guess what we're doing? We're surging. Gold, it moves up higher into a recession. What's it doing now? Threatening to break out to new all-time record highs. And here's the S&P 500 here in gray. Take note of a potential. I'm not betting on this. I'm making an observation. We have a potential double top, and you could argue the same on gold, to be fair. So might we break out to new all-time highs? Sure. But just beware of how the chart is setting up possible double top, but the same could be said for gold. Let me check back in with ag for a moment. Ag and oil. I have shorts on here, so I just want to check in. Good. And this is not open yet. Okay. All right, let's do some chart requests. What time is it? We have time. We have time. Folks, if you're not a member to our free forum, please sign up. No credit card required. It takes about 2 seconds. I put the link to do so in the chat area. Boom, yay. And let's see what we got. Let's do a refresh. A handy dandy pencil out. And let's see what we got. Natty Gas, UNG. TLT. Sean, you got it, pal, of course. Soundhound, good one. I haven't seen that one in a couple of days. The last I looked, I did peek at it the other day just by happenstance. It did not look good. I remember seeing a bearish reversal bar. TGTX. But the small caps are rallying right now. Ow. Ow, I just hit my ankle. All right, let's get to it. Let's begin with UNG. All right, so UNG backed off the highs of the week last week. It attempted to do a breakout. It got rejected. Now, I'm not as long as I was this time last week of natural gas because we owned Boyle. This is a leveraged product. That closed up last week. That's why I was kind of surprised to see UNG down. I knew Boyle closed up. And we got called away at a $55 strike. That being said, we're still long of natural gas using a put spread. That is a bullish bet. People hear puts, they think it's bearish. We sold the puts. Therefore, we are the casino, not the gambler. If the shares are put to us, they're put to us. We want them. In fact, we got called away at $55 strike. I sold the 54 strikes. So I hope they're put to us. I think that natural gas is due for a pullback. It's had a heck of a run here, but I think it's going a lot higher. So we leaned into the 2 standard deviation Bollinger Band. If we pull back and retest 55, no great shock. That's an opportunity. And we are breaking out of a Bollinger Band squeeze. Bollinger Bands in red, Keltner channels in green. It should look the same for UNG. I know you asked about UNG. Yep. Let's get rid of the lines here. Folks, you're using TrendSpider, 35% discount code below for automated technical analysis. There we go. So here's the Bollinger Band squeeze. Same thing as on Boyle. And we're beginning to widen out these Bollinger Bands. I think that all we're going to do is let me get rid of all these. We're going to start fresh. You know what? I'm going to keep this. Get rid of these. Yeah. Okay, that works. You don't get rid of them all. I don't want to do things half-assed. Okay, so here is our prior downtrend channel. We have since broken out. Rear view mirror stuff. Now, what we're looking to do is take out $20 a share on the UNG. I think that if we close above that mark on a weekly time frame, we're coming up here. This is a big move. $27 easy on natural gas. So first stop is going to be this pivot point here, 21.71. After that, we go up to $27 a share. UNG, it could happen this year. Let's go to the daily chart. I think that we pull back here on natural gas. And we're already pulling back. We could pull back on the UNG down to 17.31. I would entertain accumulating positions down at that price point because I think that natural gas, all the news out of Europe is very bullish for the U.S. natural gas industry. Now, the only problem for natural gas is if the war, it's sad to say, I hope it ends, all these people dying for no reason. If the war in, excuse me, if the war in the Ukraine ends, and there's peace and the sanctions are lifted off of exports of Russian gas, then that could impact adversely the U.S. markets. So just beware of, sadly, peace could be bearish for natural gas. Keep an ear out for the peace terms, and we may put demands on NATO countries that they have to buy from us for security concerns. I could see that happening just to protect our industry and market share. And I don't know whether or not Europe is going to want to go back to being beholden to Russian natural gas. TLT. Now, we're long of TLT. To be honest, my worst performing position. But what did it do last week? Bullish engulfing bar, outside reversal bar, call it cupcakes, call it what you want. A beautiful, beautiful breakout or a recapture of support. Double bottom setup on stochastics. Momentum is beginning to bottom out here, and it looks as though we're going to move up higher. In fact, yields in the pre-market already are down. I think they're going to carry through to tomorrow because we broke down to new daily lower lows. So I think that the odds for TLT moving up are looking favorable. Also, if the Chinese, as I'm predicting, play the smart game, and they are smart, if they play the smart game and they commit to buying U.S. treasuries, then, of course, the TLT is going to rip through the ceiling and send bond yields down lower. That could keep the market in the United States, meaning the equity market, moving up higher. Unfortunately, you can forget about Fed rate cuts because it's probably going to push interest rates up higher. And if the Chinese are doing the job for the Federal Reserve, then the Federal Reserve is going to take advantage of it, and they should, and continue to dump off debt off of their balance sheet. Let's see if they play the smart game or whether or not they try to hamstring President Trump 2.0. Now to the daily chart of TLT. We broke out on Thursday. We haven't done a retest yet. I could see us pulling back, doing a retest of 86.80, and then pushing up higher. Let's see. For Sean. All right, so it pulled back to that support level, ATOM, that I predicted that we would head to. The question is, does it hold, right? We don't have a crystal ball. We just identified it as being a support level at which you should expect some defense, and it appears we got some defense. The problem for this stock, Sean, is that we have a lot of institutional distribution here. So this is telling me that they're probably going to try to pressure the shares down lower. So what do you look for on this trade to decide, okay, I want to buy more, or I want to initiate a new trade here? What I would do is I would still eyeball this support level. I would also bring up prior support levels as well. These are the automated trend lines. I did not draw these lines. This is the algorithm. And I would watch for support down at $7.41. Now, if we test that support level, I would be a buyer. If they reverse it off of that support level to close it back above the support level here in gold, I'll call it orange, I would be an aggressive buyer, because if they retrace all the way down here and then do a bullish reversal bar to close it back above that support level, that is a bottom. It's going up higher. But right now, I think the pressure is still to the downside. I would not catch a falling knife here. Volume did drop off on Friday. Let's bring up that weekly support onto a daily chart. All right, it's not showing here for whatever reason. Let's go back to the weekly chart. This is the price point I'm interested in here. This is like a diamond jig to a barracuda. So 7.32, I like that price point. I think that we're going to tap it. The question is, do we reverse off of it? If we close there, then I wouldn't be an aggressive buyer. I'd wait to see whether or not we put in the 3-day, the 3-period rule in this case, the 3-week rule. We hit it. As long as we don't close down below it, do we retrace? Not retrace. Do we bounce here for another couple of weeks, forming a base and then moving up higher? That's what we'd be looking for. I wouldn't go all in at $7.32. I would nibble and see what happens from there. Ideally, you get that reversal bar. Stochastics are flatlining here, which is bullish. Maybe this does hold. I just wouldn't want to bet on it right now. Not with that weekly down volume so high. You're welcome, Sean. Soundhound. We were bullish on this name way back here. We owned it. Yeah, and this is what I was looking at. All right, let's begin weekly view here. I am not bullish on this stock. I was bullish. Longer term, I'm bullish, but I'm not bullish right now. I could be proven wrong, though, because the small caps are doing well in the opening session here. Support is at $12.27. Momentum is rolling over. We had some good volume last week, but a lot of that was trading back and forth. We close off the highs of the week. Now, the daily view, here's what gets me nervous about Soundhound is this. Bearish key reversal. We bounced off of support. That's a bear flag setup. I think that this breaks down. So if it fails to hold the support level, I think we're heading down to a range between $9 and $8.39 on Soundhound. TGTX. I like to go to the higher level view. I haven't looked at this one in a little while. All right. So I don't see a screaming reason to buy a lot. But this support level here at 26 bucks a share, which acted as resistance back here and back here, that should now act as support if this is a strong stock. Now, we're coming out of a long base. So a lot of the sellers are gone here. We took a run, not once, but twice at this resistance at 37 bucks a share. We were rejected. It could be setting up for another run. Let's go to a weekly view. They tried to tackle resistance last week. It was rejected. Momentum is declining. I'm not a buyer here. Let's go daily view. For me to want to buy this, it'd have to close above 30 bucks a share because that would put us through this downtrend channel, the upper band of a downtrend channel. Problem is that you get more overhead supply at 31, which is fine. So nibble on a breakout. Can always set up an alert. here. Right there. That's the sweet spot. And we'll keep that active for a few weeks. So our alert is set. Let's take a look at seasonality on TGTX. January is not a good month. Now, February is the second best month out of the year. Let's take a look at the weekly view. Odds favor bulls for the next several weeks. So you're in a good period of time to own this stock. So it looks promising. It just needs to close above that $30 per share mark. Then I would become more interested in it. Tim, you're very welcome. And that's it, folks. Thank you for being here. Happy Trump 2.0. I'm looking forward to a lot of good things. But as I mentioned, I'm looking forward to a lot of landmines getting fired off. And those landmines, look at yields. Look at yields dropping down here just off of session lows. Volatility appears to be firming up. Let's go to a 1 hour chart. All right, 1 hour view. We need to go higher level view in 15 minutes. Forget about that comment about VIX. NASDAQ is stable. Let's check in with oil. Oil, not much of a change since we've opened here. Momentum is building to the upside. Let's check in with the dollar. The dollar is looking weak. Now, that should bode well for gold, but that's down. But silver is up and gaining. Silver back above $30 a share. Silver's looking good. Let's go to a weekly chart of silver. Silver's very close to a breakout. I think this is going to be a year of silver. Gold as well, but silver is undervalued relative to gold. It's a much smaller market, much easier to move the metal in terms of price. So silver looking very, very good. Everybody have an awesome night, a profitable trading week. Thanks for being here. Like, subscribe. Don't forget TrendSpider, minimum 35% discount code. Use the link below. I give it away free to our silver and gold level members. I'll talk to you soon. Be well.